Dan Frishberg, Jordan Kimmel, and Don Schreiber. I want to move away from the banks for a second because I don't think we'll solve the whole thing here now. But we heard you. The other big event today, if it wasn't for all the banks, is the liquidation and bankruptcy of Circuit City. Not just for Circuit City's sake, but as an indication of how dire the consumer is and how that whole business not only goes away in this context, but creates a huge real estate hole and all the rest of it. Jordan, how do you interpret Circuit City, not just for Circuit City's sake, but as an overall indication?
Well, it's the mood. See, what happened was in the beginning of last year, I thought it was Wall Street's problem, not Main Street's problem.
January 08.
The whole banking problem, all the leverage. People said they were happy, they were going to work. I thought it was Wall Street's problem. It actually spilled over to Main Street, and if you tell someone you're sick enough, and you keep the air from a healthy individual, they're going to not breathe anymore. So it's really a mood thing.
Right.
And so the question, who's not a bank, who doesn't get money right here?
Right. How do you deal with that? In other words, when you are supporting institutions on the one hand, and the other hand, there's distress really across the entire economy, which is why you see Larry Flint and other people saying, hey, what about me? You know, fast money's going to become a bank. So how do you cross that bridge? And does this create more of a negative cascade inherently? In other words, is this now just a vicious cycle?
Well, that's one way to look at it, but what about this? This industry is not going to collapse. This
industry being electronics.
Yeah, this is a test case to see whether they were right that things are too big to fail. What's going to happen? Are the wholesalers going to stop to grant credit to Best Buy? Are the real estate guys going to stop building strip centers? Are all these bad things going to happen that are analogous to what they said would happen? The fact is, these guys are going to go get bankrupt. People are going to get bargains. There's going to be an upside in the electronic business, and everybody's going to survive like we would have if we would have let the cycle run its course in the financial business.
So you're suggesting that actually this is the right way to do it, and what we've been doing with cars and banks is the wrong way to do it.
Now we have made investment banking into a public utility.
Yep.
We don't allow you to get bargains in real estate. You got to go to China to do that.
Yeah.
You can still make money in electronics.
Do you agree with that?
Well, I think you got to make a case for what's systemically risky financially to the entire system and what's just a bad business. Circuit City was a weak franchise.
Sure.
All right? One of the weakest. And so they went out of business as business conditions fell apart. That happens, and we shouldn't be bailing those things out. So, you know, that is not a fundamentally systemic risk to the financial system.
Why would we not apply the same Circuit City business model, which is the traditional American capitalist model, risk and reward, to...
But let's think about it. I mean, I actually like Circuit City, but that's another thing. But thinking about what you're saying here, I remember Crazy Eddie going out of business.
Yeah, remember Crazy
Eddie? The Wiz went out of business.
Of course.
The Dow was 1,000.
Listen, I'm not even suggesting
let them go bankrupt, and there's going to be more consumers and more cell phones.
So then let's make this investable. Then let me make this investable because I only got a minute left. And we presume we got a bunch of retailers under pressure. We're going to be more Circuit Cities.
Right.
Should I be looking and speculating in short positions or buying puts from an investment standpoint across fragile retailers at this point that are likely to go into liquidation or bankruptcy, as predatory as that may sound?
You Dylan Radigan or you viewer?
You viewer. Well, I am a viewer.
You should stop worrying about trying to find bargains in the stock market right now. It's not a game for you. You want to do a trade, we're going to probably start a rally. We'll have a honeymoon for a week or two. You can make a little money. That's not an investment. That's a trade.
Yeah, well, same thing.
I think it's more of a honeymoon. I think it's more of a honeymoon. We're at a bull market. I agree. You look for cash flow. The shorting should be done.
You got the last word here, Don.
I think what we want to do here is we're anticipating a more positive environment within the next 3, 4, 5 months in the markets. So I think we want to build positions in really recession-proof or the safest stocks that we can so we don't miss the rally.
So then basically it's your best risk-managed way to have equity that will appreciate as the whole place fills back up, if it fills back up,
you bet,
without getting knocked around in the storm.